For more on the outlook for crude, natural gas, and the rest of the commodity complex, let's bring in Edward Meir, commodity analyst with MF Global. He joins us now from Stamford, Connecticut. Mr. Meir, thanks for your time today. Appreciate it. Wanted to start with the crude story and what your expectations are for the next few months.
Well, I think over the next 2 to 3 months, let's say the third quarter, I think we're going to be in kind of a sideways trading range. We've had a great move higher, as you know, over the last several months, pricing in the recovery story. But I think that many of these commodity markets have gotten ahead of themselves, given the data, and are due for a bit of a breather right now. So I don't think much will happen over the next 2-3 months, and then maybe we'll start to push higher again towards year end.
So in the sideways months that you expect trading, what range are you looking for crude, for example? We're at around 64 right now.
I think the old highs are going to stand. This will be $73. I don't think we're going to push past that. On the downside, we're around 64 right now on WTI. We could get down to maybe 58, something like that. But pretty much between 60 and 70 for most of July and August.
I was looking at some of the other expectations on the street. I'm seeing a lot of updated targets for the year end that are actually between $70, $76 a barrel. So that would fall potentially within your expectations for the year end level for crude?
Yes, yes.
What if we move along to the story for natural gas? Obviously, a lot of people pointing to the supply picture there right now. What is your outlook compared to crude, let's say, over the next 2-3 months?
Again, very, very dormant on natural gas. Unlike crude, it's a very regional market. It's not subject to arbitrage plays, investment plays. You have a lot of supply coming in from previous initiatives that were taking place. You have a lot of LNG, liquefied natural gas, on the market that is going to find its home somewhere in the U.S. So I think that's sort of a non-event in terms of a market. I don't see much volatility there, and hence limited room for trading.
Is it a story that changes as you get into next year? Boone Pickens, for example, recently had suggested we could see the $7 level in the coming year.
Possible. Unlikely, I would think, given where we are right now. But certainly if you get some exogenous variables like a very nasty hurricane season or something like that, you might see it, or alternatively a pickup in industrial demand. That's what's really also keeping things very subdued.
Before you joined us, we were talking about equity valuations for some of the energy stocks out there. I know you're not a stock analyst, but what are some of the factors that equity investors need to consider when they're looking at these commodity plays right now?
Well, I think you're going to have to put up with a lot of sort of short-term pain if you're in these stocks. They have huge moves. They're almost a mirror image of the underlying commodity, and you can see you've referenced some of the trends of late. You have big swings in these names, and if you're going to kind of lose sleep over them week over week, you shouldn't be in them. But if you're kind of a patient investor, I think you should just have some exposure to the commodity markets, because I think over time the group should do better. Having said that, I think there was an amazing bubble last year, and we were quite lukewarm about the sector for many months before all these prices crashed.
I was hoping to get your perspectives on copper. It's down about 3.5% over the past 2 trading days. Last week there was some excitement surrounding comments out of China and the demand appetite coming from that market. What is your expectations if we move to the copper story?
I think copper has kind of run its course for now. The Chinese have been, as you know, buying a lot of metal for both stockpiling purposes and for their stimulus programs. They announced about 2 weeks ago that they're going to be on hold for a while. And in fact, they did say how much copper they did buy for their own account, so to speak, and that has left a lot of metal sort of unaccounted for, and we suspect it's sloshing around the domestic Chinese market and creating a bit of a surplus there. That accounts for a slight change in the arbitrage as well, which means metal is not coming into China. It's not as attractive to bring it in. And then, of course, you mentioned the fact that many of these macro numbers are now coming in either in line or slightly ahead of estimates. that's just not good enough to jumpstart another leg higher in these commodity markets, copper included.
We mentioned crude, we mentioned natural gas. I want to come back to that part of the story, and specifically gasoline prices and your expectations as we move through these summer months.
Gasoline's chart patterns, which is what we kind of look at quite closely as well, have really deteriorated substantially over the last week. We expect a pullback to maybe the 155 to 160 level on the nearby spot contract. Demand is still very sluggish in the States. You know, it's up sort of 1% week over week, but this is the seasonally strongest quarter for gasoline, and yet we're dragging, so to speak. So I don't see much in terms of the demand push. Refining margins are also under pressure, so you know, possibly some of the refiners may put less inventory, may process less product down the road, but for now we have quite a lot in storage.
All right, on that note, we thank you for joining us. Edward Meir, commodity analyst at MF Global, joining us from Stamford, Connecticut. And when we come back, we're going to talk a little bit about the telecom sector. It has been rallying today. Who's leading that rally? We'll find out next.